Welcome. In today's market, where technology is evolving faster than ever, global innovation is reshaping entire industries, and major opportunities are flying under the radar. Today, we're diving deep into two highly compelling companies, worlds apart, yet both positioned right at the center of billion-dollar trends. On one side, we have the micro-cap AI stock poised to revolutionize data centers, POET Technologies. On the other, Scitec Biosciences, a steady biotech firm decoding the mysteries of the human cell. The crucial question for investors is, do you bet on the high-risk, high-reward upside of a tech disruptor like POET, or do you opt for the stability and steady growth promised by Scitec? Quick disclaimer, this video is for informational and educational purposes only. It is not financial advice. Always do your own thorough research before making any investment decisions. Part 2. Stock 1. Scitec Biosciences, CTKB. First up is Scitec Biosciences, with the ticker symbol CTKB. Scitec operates in the biotechnology sector, specifically focusing on cell analysis technology. They provide the advanced tools researchers use to study individual cells to develop new drugs and therapies. Their flagship product, the Scitec Muse Microcell Analyzer, recently won a major drug discovery solution award, a strong nod to their technological innovation and credibility. The company is focused on stability and global expansion. A new facility in Amsterdam, for example, signals their strategic push into the growing European market. Financial analysis, stability check. Let's look at their recent performance. Q3 2025 revenue was $52.3 million, marking modest growth of 2% year-over-year. That's slow, but it's stable. However, here's a red flag. Gross profit fell 5% to $27.6 million, with gross margins dipping from 56% to 53%. This squeeze on margins can put pressure on future profitability. Operating expenses increased by 10%, leading to a loss from operations of $9.2 million, up significantly from $4.2 million last year. This confirms that costs are growing faster than revenue. The bright spot. Scitec maintains a very strong cash position, with cash and marketable securities at $261.7 million. This gives them significant breathing room to weather challenges and continue investing. Analyst consensus is generally favorable, with a buy/overweight rating and an average price target ranging from $5.23 to $5.75. The story here is careful growth with manageable risk. Scitec is the profile of a stable, lower-risk player, but profitability pressures and margin dips require close monitoring. Part 3. Stock 2. POET Technologies, POET. Next in our showdown is POET Technologies, ticker POET. This company is chasing the future of high-speed AI connectivity. POET is solving the critical bottleneck, slowing down massive AI data centers, data transfer speed. Their optical engines simplify connections, enabling speeds of up to 1.6 terabits. Showing the optical interconnect. Market potential. The optical interconnect market, driven by AI and cloud computing, is projected to surge from $15 billion in 2025 to over $35 billion by 2032. POET is positioning itself to capture a significant piece of this growth. A bar graph showing growth from $15 billion to $35 billion. Major catalysts. In October 2025, POET received a key $5 million production order. This is a true revenue sign, not just testing. Furthermore, their partnership with Quantum Computing Incorporated to develop a 3.2 Tbps optical engine places them at the cutting edge of the industry. $5 million production order text, combined with a rocket launch B-roll. Financial analysis. Early stage. POET is a classic high-growth, early-stage company. Q3 2025 revenue was minimal at just $268,000, while the net loss stood at $17.26 million. A large red chart showing $17.26 million net loss. The liquidity story. This is where POET shines. The company recently secured a massive $150 million oversubscribed offering and a prior $75 million investment. This gives them over $300 million in cash, securing their runway well through 2026 for aggressive development. display $150 million and $75 million figures together, illustrating the large cash influx. Yes, POET is burning cash, but this is typical when chasing a massive, transformative market. Investors are betting on the technology's ultimate scalability. POET stock chart, showing only the upward trend line. 850 POET represents the high-risk, high-reward profile. If their technology becomes a standard in next-gen AI centers, the upside could be extraordinary. On-screen summary. Pros: massive AI potential, strong funding. Cons: high loss, minimal revenue. Part 4. The showdown and comparison. Now let's put these two companies head-to-head in the ultimate investment showdown. Market and trend. Scitec is in the mature, steady biotech market. POET is exposed to the explosive, high-volatility future of AI hardware. Financial profile. Scitec has steady revenue and a large cash reserve from its established business. POET has minimal revenue but has secured massive funding, ensuring liquidity through a critical growth phase. Risk profile. Scitec carries moderate risk, primarily centered on profit margin compression. POET carries high risk. The biggest threat is failure to commercialize its technology successfully before running out of cash, despite the recent raise. Which stock is right for you? If you are an investor who values stability, proven products, and cash reserves, and you have a lower risk tolerance, Scitec Biosciences offers a compelling, steady opportunity. But if you are willing to embrace high risk for potentially exponential returns, and you believe in the transformative power of AI hardware, POET Technologies should be at the top of your watch list. Ultimately, successful investing often involves balancing caution with ambition. You might even consider both to balance your portfolio's risk exposure. Part 5. Conclusion and call to action. Scitec Biosciences and POET Technologies offer fascinating, distinct case studies in innovation. One stabilizes its global presence. The other builds the very foundation for the AI-driven future. Remember, investment decisions must always be based on your own research, risk tolerance, and financial goals. If you enjoyed this deep dive analysis and found it helpful, please take a moment to hit the like button, share it with your friends, and subscribe. Your support helps us bring you more in-depth educational insights. Thank you for watching.